the more valuable silver becomes. It could be like a substitute in terms of jewelry for gold, and it could be even become like a status symbol, because with silver at $20, it's not, but if it's like $500, if you're wearing silver, you've got money, right? So yeah, it's not just the industrial. I think the jewelry part could be interesting.
Now, the U.S. Mint situation it is a fact that they've delayed the 2026 coins out to apparently February 26th. Now, I'm not sure if it's February of 26 or February 26, but suffice to say, they're delayed. And they're delayed because, well, the story you're going to hear is they're delayed because of price volatility, and they're trying to set the price so they don't lose money. They want the market to settle down. And maybe the market will settle down between now and when they release it. But the reality of it is, if price is not settling down, that's because metal's not available.
As silver prices climb toward potential targets of $500, the metal is poised to transform from a standard industrial input into a prestigious status symbol. At $20, silver jewelry is accessible, but at three-digit valuations, wearing it becomes a display of significant wealth, potentially igniting a new wave of demand. However, a critical supply warning has emerged. The U.S. Mint has reportedly delayed the release of its 2026 coins until late February. While the official excuse cites price volatility, this delay is a glaring signal that the physical metal needed to mint these coins may not be available. Marioinnecco, host of the popular Innecco 64 financial channel, and Vince Lanci, a former energy trader and founder of GoldFix, discuss how this halt in production contradicts the narrative of abundance. They argue that if the mint cannot source silver during a price spike, it validates the theory that physical inventories are dangerously low. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I just saw earlier today that the price of silver on the Shanghai Gold Exchange and the futures exchange was trading around $93, $94. And I think the Chinese exchanges, they're less leveraged than COMEX or the LBMA. They're real physical markets. Not saying that maybe there might not be speculation there, but it's less speculative. And I think that's one of the reasons why gold and silver have been going up so much, is because the paper game is now unwinding because, people want the physical. And we've had also in silver the supply deficit, production deficit for the last 5-6 years. And we have countries like I said earlier, India, they need a lot of silver, not just for to back loans, collateral, but they're also into solar power a lot, and they have a growing economy and a huge population, so they need a lot of this stuff. And also, unfortunately, the world seems to be becoming more and more dangerous and susceptible to a major war. And raw materials always become really important during times of war. So I think that's one of the reasons why, that's happening as well. China realizes that America is going to do the same thing. They're going to close off and control exports because, they're the two biggest rivals. So it's normal that China is doing that. And it's not the biggest silver producer, but it does refine and produce a lot of silver-related stuff. And I definitely think they wouldn't approve silver being shipped to the COMEX or the LBMA. So I don't think it's a blanket, let's say, blocking of exports, but they're going to be a lot more careful of who, what kind of silver and to whom the silver is shipped abroad. The silver is so minuscule in that product that even if the price of silver doubles, it doesn't make too much of a difference to the price of that product. But of course, there will be things that, like solar panels, that maybe they'll try to substitute. But the other thing is that the more valuable silver becomes, it could be like a substitute in terms of jewelry for gold. And it could be even become like a status symbol, because with silver at $20, it's not, but if it's like $500, if you're wearing silver, you've got money, right? So yeah, it's not just the industrial. I think the jewelry part could be interesting.
The verifiable fact. Costco is getting picked off every day. People are going in when silver rallies $5, $10, and they're going in, they're buying 100, ounces of silver. So when the price of silver rises during the day, you just pile in there if you're a contractor and you buy as many as you can. And so what they're doing is they're seeking to control how much money they're losing on these. These are a loss leader now. All right. So how do you do that? You do that by saying, and it's not 1 ounce per customer. It's one sleeve of 20 ounces per customer. And you can go back and do it 10 times a day, but only one per purchase. So it's like, oh, silver's up $5. I'll go and I'll buy a sleeve. I walk out the door. I come back in. I buy a sleeve. They're limiting one per customer per transaction. It's hilarious. So if you have like 8 kids and silver's up $10, just fuck them. Just go in and just buy them all. Whatever. They're not gonna limit how many you can buy when the price is trading 50 and they're selling them to you at 80. Fuck that. All right. Sorry about the rudeness, but be a capitalist about it. Okay, so that's the Costco situation. Now, the U.S. Mint situation is, it is a fact that they've delayed the 2026 coins out to apparently February 26th. Now, I'm not sure if it's February of 26 or February 26, but suffice to say, they're delayed. And they're delayed because, well, the story you're going to hear is they're delayed because of price volatility, and they're trying to set the price so they don't lose money. They want the market to settle down. And maybe the market will settle down between now and when they release it. But the reality of it is, if price is not settling down, that's because metal's not available. And we don't know how much metal is available. Now, with regards to the numismatics, there is a David Bateman and Silver DeGen have been noticing this, and I count them as credible, obviously. That there's a U.S. Mint memo circulating saying numismatics, I'm not sure exactly what it says, but numismatics will be delayed, or numismatics might be stopped, or certain numismatics just might not be made this year. I mean, all this shit points to a lack of silver, okay? It's the illusion of liquidity. But anyway, so that's the those are the facts. Now, why you don't ignore the rumor part of it, they're out of silver, they're this, they're that. You can't, it's real, okay? Here's what I mean. 6 months ago, we reported that Japan was restricting the amount of bars you could buy, the types, so you can only buy a certain type. They weren't re-smelting, they weren't refining, they weren't making new bars for the public, because we believe and still believe that they were making them for the government. The government is sucking all the metal up the supply chain. Same thing is happening in North America. We're sucking all the metal out of Latin America. Same thing is happening in Thailand. You can't buy gold anymore. In China, we want you to buy gold, but it stays here. Metal is being hoovered up the supply chain, either directly, the government's buying it, or by encouraging people to buy it, for ETFs or what have you. And war stuff. This is war stuff. But that aside, that's why you can't ignore these. How many conspiracy theories have become conspiracy fact? You can't ignore the fact that Japan is restricting what bars you can buy. New customers can't come into an Indian ETF. China is restricting exports of silver. The U.S. is pulling concentrate out of Latin America. The concentrate that China used to get, we're getting now. Okay? You've got, unrelated but related. Canada is going to be selling Chinese EVs maybe. I mean, this is war. Okay? And during war, you export immigrants and you import metals. And that's what's going on right now. So these rumors of not making any numismatics, I would say that's a 50% chance of being true in 6 months. Rumors of them not having enough silver to make coins, I'd say that's probably not true, meaning it's true, but they're not going to not deliver. A failure to deliver silver coins at that level will be a catastrophic signal to the market. They will deliver these coins and then they'll change the rules for next year, which is what they always do. Here, London, here, England, you want your silver, you can't have it. We gave it to the French. We changed the rules now. They changed the rules. Change the rules, preserve your reputation, and change the rules.
The widening spread between Shanghai and Western markets marks a critical unwinding of the paper game, as physical demand exposes the leverage inherent in COMEX pricing. This structural shift is compounded by geopolitical instability, as China tightens export controls and the U.S. aggressively secures Latin American concentrate, effectively draining the global supply chain for strategic purposes. The scarcity is now flashing red at the retail level. Costco has implemented strict purchase limits to mitigate losses during price spikes, while the U.S. Mint has reportedly delayed 2026 coin releases until late February. Although officials attribute these delays to price volatility, the coordinated restrictions across Japan, China, and the U.S. suggest a deeper reality where government stockpiling is quietly crowding out public access. This confirms a transition to a war-footing economy where owning physical metal becomes a matter of national security. Let's get back to the interview.
CME to reconfigure silver margins temporarily. Now, what they're doing here, and by the way, if you're going to say to me, just right off the bat, this is not bearish, okay? I'll explain why. CME is going to raise the margin requirements so that it's actually a reflection of the price. So the margin requirements will go up as the price goes up. The margin requirements will go down as the price goes down. Now, shenanigan risk aside, that's actually the better way to margin it. The reason to understand why this matters, you have to understand two things. The reason they haven't margined it that way in the past is because they wanted retail to be involved in the contract. Even though the contract is too big for retail, they wanted it to be acceptable by the public, accessible. Now they're raising the margin requirements, well, because they have to. But the silver contract is too big. You can't get retail buying it anymore anyway. CME is losing business to ETFs. CME is losing business to crypto products. CME is losing business to Polymarket. Okay? Robinhood has crypto now. Robinhood's going to have prop bets. CME is losing business. How is this bearish for silver? I'll tell you how. One of the key aspects of the precious metals phenomenon is I'm sorry to use the phrase, but the democratization of ownership. So when China encourages its citizens to buy, instead of one person buying 1 million ounces, it's 1 million people buying 1 ounce. And that's very bullish. That's like an IPO. Now in the US, watch, I'll bring this to the CME. The CME is simultaneously raising the margins because they don't want to encourage stupid speculation on the big contract while launching a 100-ounce contract. They want the retail to come back to them. When you create a smaller contract for the masses to use, it's bullish. It's not bearish. It's bullish. And they want to get the retail out of the regular contract. So yeah, it's probably going to be something that they make us hold a bag on at some point, but it's bullish. Raising the margins on the bigger contract while creating a new contract for the retail to buy is like breaking open a pack of cigarettes and selling them one at a time. And everyone's just going to just buy the shit out of it. And then you're going to have Pax Gold, you're going to have CME Silver, you're going to have some Robinhood bullshit item, and you're going to have all these things happen, and it's going to be in your face. It's like, why does a stock go public? A stock goes public because it raises awareness and everyone starts to buy it. Well, this is the awareness. Costco, the U.S. Mint, CME. This is all bullish. It's not bearish. Someday it'll be bearish, but not yet.
And one thing you won't hear in the mainstream is the situation vis-a-vis COMEX and the LBMA, and the fact that the physical silver in those two exchanges are, the supply, and the availability of it is going down quite a bit. And you don't see the mainstream cover that much. And I think it's one of the reasons why people have been shocked with the fact that silver just keeps going up, because they don't understand that, because it's such a leverage market in that there's a lot of shorting, paper shorting. And if people, other counterparties are demanding physical, these shorts, they're going to have to buy buy the contracts to close it out, and that drives the price higher. I think, yeah, we hear very little about that on the mainstream financial press. That's something that I think people need to be aware of. I think the institutions that want to take delivery are sovereign wealth funds, very wealthy individuals. And I think the penny is dropped and they don't trust the paper contracts, and also central banks in the Middle East. I think the BRICS, aside from gold being a really important part of their new monetary architecture, I think silver is going to be part as well. And I think places like Dubai and places in the Middle East, Saudi Arabia, they want to be a hub for silver. So they're not going to just buy futures on COMEX or unallocated silver on LBMA. They don't care. They just want the physical. The paper is nothing for them. I have a couple of dates. I look at cycles. One of them is around 2027, 28. And that's to do with the Dow Gold ratio. And I've looked back in history, from 1933 to 1980, we went from 2-to-1 in the Dow, and then back to 1-to-1. And that cycle took 47 years. And so if you add 47 to 1980, you get 2027. But I've heard from people who are a lot more thorough and have done really long-term analysis of the cycles going back to the 1600s. And I think it's Bert Doman. He's a German-American investor in the precious metals, and he's got a date of 2032. So I think we still got quite a bit of time in the precious metals bull market. I don't think we are like in 1979, which was the last year of the 1970s bull market that culminated in January 1980. I think we got more time on our hands.
The CME's decision to reconfigure silver margins into a dynamic, price-adaptive system is being hailed as a bullish structural evolution rather than a bearish restriction. By raising requirements on large contracts to reduce reckless speculation while simultaneously launching accessible 100-ounce mini contracts, the exchange aims to democratize access and recapture retail capital currently flowing into crypto and ETFs. This strategy is compared to an IPO for silver, designed to broaden public participation and reignite physical demand massively. Meanwhile, a disconnect persists in the mainstream media regarding dwindling physical stockpiles at the COMEX and LBMA. As sovereign wealth funds and BRICS nations demand immediate delivery, bypassing paper derivatives entirely, short sellers face an inevitable squeeze. Historical cycle analysis reinforces this long-term optimism, with Dow Gold ratio projections suggesting the current bull market has significant runway remaining, potentially extending into 2027 or even 2032 before reaching a 1980-style mania peak. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.